Yeah, my dear students, after you would have watched some of the standards based on your requirement, let us continue with another accounting standard, of course, at Group 2 level, Accounting Standard 26, that is Intangible Assets. The areas which are very, very important for revision purpose is nothing but scope of Ind AS, scope of AS, that is 26, definition, recognition criteria, modes of acquisition, amortization, amortization period, amortization method. Basically, of course, the last I would not discuss directly as a revision part, but that is nothing but our disclosure. Now, where does our AS 26 apply? Of course, rather than saying where does it apply, I would say where it does not apply. That is nothing but the scope. Where it does not apply. So, number 1, goodwill. Of course, as per AS 14, in amalgamation, goodwill is arising, that is not covered by AS 26. Goodwill as per AS 21. Intangibles covered by another accounting standard. What are the intangibles covered by another accounting standard like AS 7 and AS 2? Intangibles held for sale, intangible in the process of construction, deferred tax asset. That is basically our AS 22. These are the areas where our standard does not apply. Okay, so the main purpose of AS 26 is nothing but to establish the principles of recognizing the value at which it should recognize, how to amortize, and of course disclosures. These are the 4 things which have been dealt by the standard. Now, first of all, after doing scope, my dear, let us talk about what is intangible asset. So, standard defines it in a beautiful way. It says intangible asset. Henceforth, I will say IA. Rather than writing the whole intangible asset, let me say IA. Intangible asset is identifiable non-monetary asset without physical substance to be used in business for production, administration, selling or distribution, or giving it on rental basis. So basically it is identifiable. When I say identifiable means what? Sir, it is separable. Separability criteria is fulfilled. Non-monetary, it means the amount is not fixed or determinable. What you learnt in AS 11. Without physical substance, this is the some stuff which you always know, we cannot touch it and this and that. To be used in business for production. administration like patent rights, software, selling and distribution, sole selling agent right, or giving it on rental basis. This is our intangible asset. But remember, my dear students, an intangible asset to be recognized in the books, you need not fulfill only definition criteria, you also need to fulfill the recognition criteria. Now, what is the recognition criteria for intangible asset? Very simple, the recognition criteria. The recognition criteria is nothing but future economic benefit will flow to the entity and cost can be measured reliably. Future economic benefit will flow to the entity. Now, this benefit can be in form of increase in production, reduction in cost, increase in sales, and whatsoever. But there will be some future economic benefit. Future economic benefit will flow to the entity and cost can be measured reliably. If these two conditions are fulfilled, then and then only we recognize an intangible asset. Of course, now how to find out cost? When I say cost can be measured reliably, my dear students, a query will be there, sir, how to find out cost? So, understand friends, cost determination depends on modes of acquisition. Now, what can be our different modes in which we can acquire? Obviously, cash, government grant, and an amalgamation, leases, exchange, and self-generated, I can say. Within self-generated, I have two parts, internally generated and research and development. Now, if it is government grant, the principles of AS20 will help us how to recognize. If it is amalgamation in line with AS14, if an intangible asset is acquired in a leases, we will recognize the same based on the principles of AS19. So, my dear students, we need to do the understanding of if intangible is acquired on cash basis, what should be the cost? Because when we say we should initially recognize intangible asset at cost, how this cost is to be determined? So, cash basis. Intangible asset acquired on cash basis. Nothing but the purchase price, whatever price I have paid, net of trade discount, plus direct expenses which are necessary to bring the intangible in working condition, plus taxes and duties of which no refund or credit shall be claimed. The price I pay, direct expenses like installation, stamp duty, any charges to bring that asset in working condition. That is nothing but my direct expenses. And thereafterwards, taxes and duties of which no refund. I am not going to get any refund for the tax what I am paying. Neither I am going to get any ITC, input tax credit. So, this will be nothing but my value at which intangible asset will be recognized in the books. So, this is our first part of discussion, this first. Second is nothing but exchange and third is nothing but self-generated. exchange. If I acquire an intangible asset on exchange basis, then standard goes in this way. If it is exchange, then friends, what does it mean? It means that I'm acquiring an intangible asset acquired against another asset, or intangible asset acquired against securities. Intangible asset acquired against another asset means I'm getting an intangible asset and I'm giving another asset. What is going out is another asset. What is coming in is intangible asset. An intangible asset against security. What does that mean? What is coming in is intangible asset. What is going out is nothing but my shares, my debentures. This is what I'm issuing. So if it is intangible asset against another asset, standard says fair value of intangible asset acquired or fair value of asset given up. See, for our understanding purpose, I will say fair value is nothing but market value, or book value of asset given up. So the asset which you give up, either its fair value or the asset which you get, either intangible assets fair value or the book value of the asset given up. It is not whichever is higher. The standard says whichever is clearly evident. Whichever is clearly evident. Even for here, what is happening, my dear students, is I'm acquiring an intangible asset and what I'm giving is my equity shares, my preference shares, my debentures. I'm issuing my equity shares, I'm issuing my preference shares and all those things. So intangible asset acquired against security, nothing but fair value of intangible asset acquired, or I can say fair value of securities issued. What is the fair value of the shares you are issuing? Of course, the question of book value will never arise. Why, friends? The question of book value will never arise. The reason is very, very simple. The securities which I am issuing does not have a book value. They are not appearing in my books. Yeah. So this is with respect to our exchange. Then comes internally generated, or I can say self-generated. Self-generated will bifurcate into two parts. The first is internally generated intangible assets. And then research and development. If it is internally generated and research and development. So internally generated, not to be recognized, like goodwill, brand. Not to be recognized. Research and development, my friends, there are two parts within research and development. Research and development. What is to be done for research? Standard says research expense of to profit or loss account. Development, my friends, there are two parts. Conditions fulfilled, conditions are fulfilled or conditions not fulfilled. If condition is fulfilled, then capitalize the expenditure. conditions not fulfilled, then expense of development expenditure. Yeah, self-generated, internally generated intangible, never to be recognized, nothing, huh? Because you cannot measure the cost, like your own brand, your own goodwill, you should not recognize. Research and development. What is research? Acquiring knowledge. What is development? Applying knowledge. So research, whatever expense you incur, it is to be expensed off immediately. Expense it off immediately. But development expense, capitalize, provided conditions are fulfilled. If conditions are not fulfilled, all conditions, if conditions are not fulfilled, friend, then development expense is also to be expensed off. Now your doubt comes, what do you mean by those conditions? There are conditions given by AS 26. It says condition number 1. The entity has intention to make the product and use it or sell it. Market is available. The project is technically feasible and the entity has adequate technical and financial resources. The entity has an intention to make the product and use it or sell it. Market is available. The product is technically feasible and you have adequate technical and financial resources. If all the conditions means you have to fulfill all the conditions. If all the conditions are fulfilled, then you should capitalize development expenditure. Condition fulfilled, then capitalize development expenditure. Otherwise, expense off. But if you say, sir, my research and development is together, then logically it should be expensed off. Now comes amortization, my friends. What is amortization? Nothing but writing off cost of intangible asset over its useful life. This is referred as amortization, that you write off the cost of the asset over its useful life. This is referred as amortization. Scrap value of intangible asset is always considered to be nil unless and until there is a third party agreement or a guarantee to purchase. Scrap value can be revised downward only. If there is some scrap value, then you can revise downward only. There is an exception to this. Scrap value of an intangible asset is always considered to be nil. Exceptions. What is the exception? There is a third party guarantee and there is an active market which will exist at the end of the useful life of the intangible asset. So this is writing of an intangible asset over the useful life. That is what we say amortization. Now, what is the useful life of an intangible asset? Standard makes two parts. It is equal or less than 10 years or it is more than 10 years. If it is equal or less than 10 years, then amortize within that period. Say the life of an intangible asset is 7 years, then I amortize it in 7 years. 4 years, so amortize in 4 years. But if you say, no sir, the life of my intangible asset is 12 years. So standard says, sorry, there is a rebutable presumption that life is always equal to 10 years and you have to amortize the intangible asset within 10 years. Rebutable means unless until you can make a point otherwise, you can prove. So this is the useful life of an intangible asset, friends, and thereafterwards, what is the method of amortization? The last area. What is the method of amortization I can use? Standard says you can use, first is based on economic benefit. In the ratio of economic benefits. Method of amortization in the ratio of economic benefits. But if economic benefits cannot be identified, like I took up a computer software, you cannot demonstrate or you cannot identify what will be the ratio of benefits. Ratio of economic benefits nothing but the ratio of cash flows or ratio of sales or units, something like that. But if that is not possible, then straight line basis. Then the method of amortization will be straight line basis. Clear, my friends? Okay, so this is all about your AS26. Yeah, of course, disclosure is self-study in sense you just have to go through it, that basically the original cost of each and every intangible, what is the accumulated amortization at the beginning, so what is the WDV at the beginning, what are the additions made during the year, what are the deductions during the year, the basics. That is the disclosure basically. The first page. In my second page. Okay friends, so let's move on to some question answers. As always, I would be focusing more on homework section and past question papers, those questions which are important. Rest classwork questions are already available. You've already done it in the class, and of course the video recordings are also available. So now let us focus our valuable time on something which is not done in the class, that is homework section and past papers. A company, question number 3, homework section of intangible asset AS26. Question number 3. A company acquired for internal use a software on 28th January 2012 from US for $1 lakh. The exchange rate was 52. The seller allowed a trade discount of 5%. The other expenditure, import duty, purchase tax, entry tax, recoverable from the tax department. Installation charges, professional fees for clearance from customs. Compute the cost of software to be capitalized. So first of all, friends, the purchase cost is $1 lakh. From that I will deduct 5% trade discount. So what I'll get is $95,000, yes, multiply by the spot exchange rate, which is 52. So it comes to 4940. Import duty 20%. So we'll add up import duty. So this is the cost. Purchase tax of 10%. Again on this purchase tax is added. What about entry tax of 5%? No sir, not to be added. Why? Because we are going to get credit of it. Then installation expense and professional fees are added. So this is the total cost. Very simple. Now, so this type of questions we have done in the class work, research and development type of questions, very important from examination point of view. Messrs Mahesh Limited is developing new production process. During the financial year ended on 31st March 2013, the total expenditure incurred on process was 60 lakhs. The production process met the criteria for recognition as an intangible asset on 1st December 2012. Expenditure incurred till date was 32 lakhs. Further expenditure incurred on process for financial year ending on 31st March 14 was 90 lakhs. As on 31st March 2014, the recoverable amount of the know-how embodied in the process is estimated to be 82 lakhs. This includes estimated of future cash outflows and inflows. You are required to work out, what are we supposed to find out? The expenditure charged to P&L for the year ending on 31st March 2013. On 31st March 2013, how much of my cost will be debited to profit and loss account? So if you look properly, the production process met the criteria of recognition on 1st April December 2012. Expenditure incurred till date was 32. So can I say till date whatever expenditure is incurred is a research expense, and research expense will be debited to the cost. Then what does the question say? What is the carrying amount of intangible asset? Then thereafterwards, from 31st December 2012, that is Jan 13, Feb 14 and March 14, whatever expenditure is incurred, can I say that would have been capitalized? So out of 60 lakhs, 32 lakhs is gone. So can I say the amount which would have been capitalized is 28 lakhs? What expense is to be charged for the year 13-14? Now see, in 13-14, what is happening, my friends? I already have 28 plus 90. So my intangible asset value will be how much? 90 is nothing but further expenditure. So 8 and 11. So 118. This is the value at which intangible asset should be carried. But AS26 also requires that an intangible asset should not be carried over and above its recoverable amount. What is recoverable amount? It is higher of net selling price or value in use, which is given here as 82 lakhs. Now what is to be done for this 82 lakhs, friends? Now, if you look properly, I am having an intangible of 28 plus 90, 118 minus 82. Can I say 36 will be the amount that will be written off immediately to P&L? And the carrying amount of intangible asset on 31st March 14 will be nothing but 82 lakhs. Expenditure charged to P&L is 32 lakhs. Okay, done. Carrying amount of intangible asset is 28. My impairment loss is 36. And the intangible asset will be shown at 82. Yeah, you may just go through the answer. It was already there in our textbook. Okay, friends, let us move on to another question. From past paper, I'm just doing some different types. See, now again past paper, this again question came. But don't you think it is already done by me in the homework section? Question number 5 from past section, my dear. A company with a turnover of 375 crores and an annual advertising budget of 3 crore has taken up marketing of a new product. It was estimated that the company would have a turnover of 37.5 crores from the new product. The company has debited its profit or loss account and total expenditure of 3 crore incurred on extensive spatial initial advertising campaign. Is the procedure adopted by the company correct? Your advertising budget of 3 crores has been taken for marketing. It was estimated company would have turnover of 37.5 crore. The company is debited it to P&L. Of course, it is to be. See, this is nothing but a kind of deferred revenue expenditure, and deferred revenue expenditure are not our intangible assets. You cannot demonstrate future economic benefits. No intangible asset or other asset is acquired created that can be recorded. Therefore, accounting treatment by the company debiting entries is 100% correct. Yeah, these are all questions based on amortization ratio, the ratio in which you get economic benefits. Question number 9 is a good question. Yes, my friends. During 1617, the enterprise incurred a cost to develop and produce a routine low-risk computer software as follows. Completion of a detailed program and design phase 1, 50,000. Coding and testing phase 2, 40,000. Other coding cost 63,000, that is phase 3 and 4. Testing cost phase 3 and 4, 18,000. Product masters for training material phase 5. And packing the product phase 6. Okay, so this is the product life cycle, I can say. After completion of phase 2, it was established that the product is technically feasible for the market. You are required to state how above referred cost to be recognized in the books of the accounts. Now, can I say completion of a detailed program design is nothing but research, coding and testing? Again, this too will go into research, means it will not be capitalized, I meant to say, because technical feasibility is only after phase 2. So, both this expense 50,000 as well as 40,000, this will be debited to profit or loss. Other coding cost and testing cost, they will be capitalized, means they will be shown as an intangible asset. Product masters for training material. Now, what should I do with respect to the product masters for training material, my dear students? This will be capitalized along with my intangible asset. Packing the product will also be capitalized, but it will form part of my inventory. Okay, so let us have a glance through it. 90,000 should be recorded as an expense. Okay, so P&L. Cost incurred from the point of technical feasibility asset recognition criteria until the time the product cost are incurred or capitalized, that is 63, 18 and 19,500. 1,05,500 will be capitalized. Packing cost should be recognized as an expense. Of course, recognized as an expense and charged to P&L means it will be forming part of my inventory. And once the inventory is sold, it will be expensed off. So, my dear students, these are the important questions, I can say something new questions which are there in our AS26 conceptual base. So, this is the end of my revision session. Thank you very much.